guys, this is the last video in our discussion on about the gross income. So in this video, we'll discuss the items which are not considered or not added in our gross income when computing the income for income tax. Okay? Always remember that as a rule, all incomes are subject to income tax unless exempted by the law. So do not assume that certain items are exempted from the tax unless there is a law or there is a specific provision of a law exempting these items. Also, exemptions are highly disfavored by the law. Thus, claiming exemptions is construed against the taxpayer, meaning to say, the taxpayer has to provide evidence to support that he is really exempted from the tax. Okay? So, what are these items excluded from the gross income? So, under Section 32B of the Republic Act, number 8424, or the National Internal Revenue Code of 1997, as amended by the Republic Act number 10963, or the Train Law, the following items shall be excluded from the gross income subject to tax. Therefore, these are not added in our gross income. So first item, we have the proceeds of life insurance. The proceeds of life insurance policies paid to the heirs or beneficiaries upon the death of the insured, whether in a single sum or otherwise. So, for example, if the insured person died within the policy period, then any proceeds received by the heirs or the beneficiary of the deceased person shall be excluded from the tax because it is a compensation of the life lost. Okay? But if such amounts are held by the insurer under an agreement to pay an interest thereon, the interest payments shall be included in the gross income. But example, when there is an agreement between the insured person and the insurance company that the proceeds shall not be distributed to the heirs, but rather be preserved and invested, for example, and the insurance company is as a requirement or as a consequence shall pay interest to the heirs. So this interest of the proceeds of the life insurance shall be included in the gross income. However, as for the proceeds of the life insurance itself, again, these are exempted from the tax. Okay? For example, Richard gets a 10-year life insurance policy from Moon Life Company where he designated his brother and his daughter as his beneficiaries. In the 7th year of the policy, Richard died by a car accident, which is validly covered by his insurance policy. By the fateful event, the beneficiaries received a total of 2 million pesos, divided equally among themselves. So the question is the proceeds of life insurance of Richard taxable? So the answer is, of course, no, it is exempted from the tax because Richard died by a car accident on the 7th year, and the proceeds of 2 million pesos received by his brother and his daughter is a compensation of the life lost of Richard. Okay, so therefore the proceeds is non-taxable. So, how about if the insured person outlived or survived the policy, meaning he didn't die within the period? Okay, so any amount received by the insured as a return of the premium shall also be excluded from the tax. So the amount received by the insured person as a return of premiums paid by him under life insurance, endowment, or annuity contracts, either during the term or at the maturity of the term mentioned in the contract or upon surrendering of the contract. So, for example, if the policy is a 10-year insurance, and then upon maturity, the insured person is not yet dead. He outlived the policy, survived the policy. And on the 10th year, upon maturity, the insured person surrendered his insurance, his policy. Therefore, he would receive the fund value of the insurance. So, any amount which corresponds to the return of the premiums paid by the insured person shall not be taxable. Otherwise, if there's an excess amount, so that would be the time when these amounts shall be included in our gross income. Example, assuming the same example above, but Richard outlived the policy. And then during the 10-year period, which he didn't die, he paid a total premium of 1,200,000. At the end of the 10-year period, he received the entire proceeds of 2 million. So how much is Richard's taxable income? So again, in this case, Richard didn't die. Okay? So at the end of the 10-year period upon maturity, Richard the same amount, not the beneficiaries, but Richard himself received the proceeds, okay, of 2 million. And then during the 10-year period, Richard had paid a total of 1,200,000 for his premiums. Okay? So, in this case, since the 2 million constitute the return of the premiums paid and of course the excess, so the 2 million shall be divided into two parts or two components. First, the return of the premium, which is also 1,200,000, and the excess amount 800,000 pesos. So in that case, there is a return of the capital and also a return on the capital. Okay? So the 2 million will be divided into two parts. The non-taxable portion, which is 1,200,000, and the taxable portion, which is 800,000 pesos. Okay? So the 1,200,000 shall not be added to tax, while the 800,000 shall be added to our gross income. So apart from life insurance, gifts, bequests, and devices are also excluded from the gross income. So any donation, any gifts received by the taxpayer in any given year are not considered as income. These are gifts, right? So the value of the property acquired by gift, bequest, device, or descent shall be excluded from the gross income. However, if such property received as gift is used to capitalize, to be capitalized, and is earning income, then only such time where the incomes derived from the use of these gifts shall be included in our gross income. Okay, so income from such property as well as gift, bequest, device, or descent of income from any property in cases of transfers of divide interest shall be included in the gross income. Okay? So again, if the taxpayer capitalize and use these gifts or properties received as gift shall include the incomes on their gross income when computing the income tax. Okay? Also, we have compensation for injuries or sickness. Again, these items are excluded from the gross income. So, any amount received through accident or health insurance or under Workmen's Compensation Acts as compensation for personal injuries or sickness, plus the amounts of any damages received, whether by suit or agreement, on account of such injuries or sickness, are excluded from the gross income. Okay? So we also have income exempt under treaty or under special laws. Income of any kind to the extent required by any treaty obligation binding upon the government of the Philippines shall also be excluded from the gross income. So if the Philippine government particularly provides that this specific income shall be excluded from tax or shall be exempt from tax, then that would be binding against the government. Therefore, or hence, these incomes are non-taxable. We also have retirement benefits, pensions, gratuities, and others. So retirement benefits received under Public Act number 7641 and those received by officials and employees of private firms, whether individual or corporate, upon meeting the following requisites. So again, retirement benefits, when once you retire from your employer company, the retirement pay that you would receive would be excluded or be exempted from the tax, provided that you met the following requisites. So first, there was a reasonable private benefit plan maintained by the employer. So when you say reasonable private benefit plan, the employer company has a private plan which is approved by the SAR, the Commissioner of Internal Revenue. And then the employee who has retired has been in service of the same employer for at least 10 years, okay? And he's not less than 50 years of age. Meaning to say, at least when he retired, he must be at the age of 50 or above. And then the benefits granted shall be availed by an official or employee only once. So again, the retirement pay must have been availed only once. Otherwise, for the second time or third time, the taxpayer receiver shall be taxable on the retirement pay. Okay? So aside from the retirement benefits, you also have any amount received by an official or employee by his heirs from the employer as a consequence of separation of such official or employee from the service of the employer because of death, sickness, or other physical disability, or for any cause beyond the control of the said official or employee. Again, when the reason or cause why would employee retire or separate from the company is beyond his control or involuntary. Again, when the cause is involuntary or beyond the control of the said official or employee, such separation pay shall be exempted from the tax, okay, or excluded from the gross income. Otherwise, if it is voluntary, therefore, such pay or such payment shall be included in our gross income. Also, we have social security benefits, retirement gratuities, pensions, and other similar benefits. So, again, once you retire, aside from the private benefit plan of the employer, of your employer, there would be retirement benefits from the social security system. Okay, so whether by lump sum or by pension, again, these are non-taxable, therefore excluded from our gross income. We also have payments of benefits due or to become due to any person residing in the Philippines under the laws of the United States administered by United States Veterans Administration. So those expats residing in the Philippines, those foreigners who are in the Philippines, residing in the Philippines, and are receiving incomes from the US government as their pension shall also be excluded from their gross income. Benefits received from or enjoyed under Social Security System in accordance with the provisions of the Republic Act number 8282. So again, the SS is also exempted. Again, the payment from the SS received by a taxpayer should also be excluded from the gross income. Also, for government employees who received retirement benefits from GSIS are also excluded from the gross income. Okay, so when you are a public official or government official and then you received retirement benefits from GSIS, then these retirement pays are also excluded from your gross income. We also have prizes and awards. So prizes and awards made primarily in recognition of religious, charitable, scientific, educational, artistic, literary, or civic achievement, but only if, so again, these prizes are exempted only if the recipient was selected without any action on his part to enter the contest or proceeding, and the recipient is not required to render substantial future services as a condition to receiving the prize or the award. Okay? The same prizes and awards in sports competition. So all prizes and awards granted to athletes in local and international sports competition and tournaments, whether held in the Philippines or abroad, and sanctioned by the National Sports Association. So, for example, if you are an athlete and you are sent to compete in a SEA Games or Southeast Asian Games and you receive the first prize, for example, so these prizes are also excluded from your gross income. The 13th month pay and other benefits are also excluded from the gross income. So gross benefits received by any officials or employees of public or in private entities. However, the total amount to be excluded from the gross income shall not exceed 90,000 pesos, which shall cover the benefits received by officials and employees of the national and local government pursuant to RA 6686. And this RA pertains to Christmas bonus. So again, Christmas bonus is excluded provided that such bonus do not exceed 90,000 pesos. Also, benefits received by employees pursuant to Presidential Decree number 851 as amended by Memorandum Order number 28 dated August 13, 1986. And this memo number is actually pertaining to 13th month pay. So again, any 13th month pay received by any employee from their employer rather, shall be excluded from the gross income provided that it does not exceed 90,000 pesos. We also have benefits received by officials and employees not covered by Presidential Decree number 851 as amended by Memo number 28. Okay? And other benefits such as productivity incentives and Christmas bonus, and of course, the minimis benefits in excess of their statutory limits. Okay, so we'll discuss the minimis benefits later on our succeeding lessons. So always remember that the total amount of these five items should not exceed 90,000 pesos to be excluded from the gross income. However, if the total amount exceeds 90,000, the excess shall be taxable. Okay? We also have GSIS, SSS, Medicare, and other contributions. GSIS, okay, so these contributions are also exempted or excluded from the gross income. So we know that in the Philippines, the uh, every employer company is required to withhold and deduct SS, GSIS, PhilHealth, and Pag-ibig contribution from the payroll of their employees. So again, these contributions are excluded from the gross income. We also have gains from the sale of bonds, debentures, or other certificates, provided that this has a maturity of more than 5 years, as what we have discussed in our in the passive incomes interest. Okay, and gains from the redemption of shares in mutual funds. So gains realized by the investor upon redemption of shares of stock in a mutual fund company is also excluded from the gross income. Okay, we also have wages of a minimum wage earner together with holiday pay, overtime pay, night shift differential, and hazard pay. So all these items are exempted from the tax if the recipient of these items, the wages, the holiday pay, overtime, night shift, and hazard pay, are received by a minimum wage earner, so these items shall be excluded from the gross income because basically once you are a minimum wage earner, you are exempted from the tax. So there is no point of computing your income because you have no tax at all, right? We also have income derived by a foreign government. So when a foreign government enters in the Philippines, there are certain cases wherein this foreign government shall be exempted from the tax. So income derived from investments in the Philippines in loans, stocks, bonds, or other domestic securities, or from interest on deposits in banks in the Philippines by a foreign government financing institution owned, controlled, or enjoying their financing from foreign governments, and international or regional financial institutions established by foreign government. Again, these incomes are excluded from their gross income subject to tax. Finally, we have the incomes derived by the government, the Philippine government, or its political subdivisions. So, if you recall our discussion on the general principles, we have this inherent limitation of non exemption of the government from the tax. So, again, all incomes by the government or its any of its agencies or political subdivisions shall be excluded from the tax, shall be excluded from the gross income and therefore from the tax. So incomes derived from any public utility or from the exercise of any essential governmental function accruing to the government of the Philippines or to any political subdivision thereof are also excluded from the gross income, hence from the tax. Okay? So I hope you learned a lot from this discussion. It's very brief, but I'm also hoping that you learn something from this video. So I hope that you also watch the next videos because in the succeeding videos, we'll discuss on how to compute the incomes. Okay? So thank you for watching.